Hi, it's Clover. Welcome back to my channel. Thanks for watching. Today we are going to do a follow-up video from the 401k video. If you haven't watched that yet, you can check that out on my last video. But today we're going to talk about IRAs. And if you watched the last video, you know that in that conversation I thought we were going to cover all of them, but then it ended up being such a long conversation about 401ks that I decided let's make a separate video. So that's this video, and we're going to talk about IRAs, deductible IRAs, and non-deductible IRAs. Oh, and we're also going to talk about Roth IRAs. Roth IRAs. That's really hard to say if you say it really quickly. Roth IRAs. If that's the kind of stuff that you're into, be sure to hit the like button and be sure to hit subscribe so that you can see the next video as well as anytime that I post a video. So we'll get into it, and thanks for joining. All right, next up are IRAs, which you've heard a ton about. So IRAs are individual retirement accounts, and these are not tied to your employer. Any individual in the U.S. who is a citizen of the U.S. or a resident of the U.S. can open up an IRA, which is great. That's one of the benefits of an IRA. You don't get an employer match, but you also have way more investment options. So also, can you hear somebody vacuuming upstairs? Apartment life. There are lots of different types of IRAs, but since this is kind of just the basics video, we're really only going to talk about Roth IRAs and traditional IRAs, and within traditional IRAs, we're going to talk about non-deductible and deductible. Like I said, you can contribute up to $6,000 if you're under the age of 50 to a Roth IRA or a traditional IRA. If you are over the age of 50, you can do catch-up contributions, which means that you can put in an extra $1,000 a year. One of the questions that I've received a lot is, can I put $6,000 in a Roth IRA and $6,000 in a traditional IRA in the same year? And the answer is no. You can put $3,000 in and $3,000 in, but you can only put a total of $6,000 into an IRA in any given taxable year. Again, like with the 401k, an IRA is not an investment itself. It is just the tax advantage bucket that you put your investments in. And with IRAs, it could be cash. You can open it with a bank. You can open it with a brokerage. Whatever it is, there's lots of different ways to open an IRA, but if you want to open an IRA with a brokerage, that's where you're going to put investments in there. Banks have other options. Now, let's first talk about the Roth IRA, the Roth IRA, because so many people love the Roth IRA. You've probably heard about the amazing Roth IRA, and that's because it is really, in the realm of IRAs, it is pretty dope. The reason is because you pay the taxes up front, and then your investments grow tax-free until retirement. And then when you take that money out in retirement, you don't have to pay taxes on it because you already did, which is pretty awesome. So really, with the compounding effect, your money is growing faster than it would if you were paying taxes on your gains. There are lots of other benefits to the Roth IRA as well. So first of all, you can take your contributions out of a Roth IRA, meaning not necessarily your gains, but the money that you have put into the Roth IRA, you can take it out anytime without any penalties, which is pretty nice. No other retirement account that we're discussing in this video allows you to do that. Another really nice thing about it is that you have more options because it's not controlled by your employer. So you can go in and pick who you want to open your IRA with, and who you open your IRA with will determine what kind of stocks and bonds and mutual funds that you can purchase. And that gives you a lot more freedom to invest the way that you would like to invest. Another thing about the Roth IRA is it doesn't have the high fees of a 401k. And another thing that it has as well is that even if you have a retirement through work, you can still have a Roth IRA. And that's not something that you can do with a deductible IRA. You can still do it with a traditional IRA, but you're not going to get any, or traditional non-deductible IRA, but we'll talk about that more here in a little bit. Another benefit too is that there's no required minimum distribution. So when you turn 72, you don't have to start taking money out, unlike with a 401k or a traditional IRA. I don't really know why that's a benefit, but I guess if you're 72 and you're pretty healthy, it's nice to know that you can keep growing your retirement fund because it'll last you, hopefully, until you die. There are technically some drawbacks from a Roth IRA. First of all, a Roth IRA or contributions are not going to be tax deductible. So the year that you make your contributions, you don't get a tax break. The other thing too is there are income limits on whether or not you can contribute to a Roth IRA. I'll put those right here. And the other drawback, as you can see from this, is that it's kind of confusing. The income limits can get a little bit confusing. It's not nearly as straightforward as a 401k, but it's still relatively uncomplicated in terms of the different IRAs that are available out there. Now, for the schmucks out there who cannot contribute to a Roth IRA because they make too much money or for some other reason, there are also traditional IRAs that are basically the tax advantaged buckets that you can still invest in. They are not related to your employer. However, you are able to get anybody can get a traditional IRA even if you have an employer-backed retirement account. There are two different types of traditional IRAs, a deductible IRA and a non-deductible IRA. A deductible, the difference is that a deductible IRA, you can deduct the amount that you contributed up to a certain point depending on your income level. You can deduct that from your taxes the year that you contribute to your IRA. So that changes depending on how much money you make and if you have an employer-backed retirement account. If you don't have an employer-backed retirement account, your traditional IRA is completely tax deductible. If you do, there are limits, and the limits are right here. It's annoying, it's confusing, and the limits are definitely something that makes these accounts a little bit more complicated. Unlike a Roth IRA too, with the traditional IRAs, you pay taxes when you pull the money out. Like a Roth IRA, you can only contribute $6,000. You can contribute $7,000 if you're over the age of 50 and you want to do your catch-up contributions. But unlike a Roth IRA, you pay taxes when you pull the money out. And how much you pay in taxes depends on whether or not it's a deductible or non-deductible IRA. This is a good move if you want to lower your tax bill. So if you make enough money where you're more concerned with lowering your tax bill than you are with getting the benefits of a Roth IRA, the traditional deductible IRA is definitely a way to do that. But there aren't nearly as many advantages to this account as there are to a Roth IRA. The biggest benefits to using a deductible IRA is that it lowers your tax bill if you're able to qualify for a deductible IRA. You have more investments than in a traditional 401k. You also have full control over your money if you do not choose to go with a brokerage. And on top of it too, you can still pull your money out for qualified expenses like college or a first-time home purchase without the 10% penalty. The drawbacks are if you pull out the money before the age of 59 and a half, you do have to not only pay taxes on it, but you also have to pay a 10% penalty if it's not one of the qualified expenses that you can use your retirement account for. And unlike the Roth IRA, I would say it is a drawback that your investments don't grow tax-free. When they grow, when you make those gains, when you pull that money out in retirement, your gains are going to get taxed as well. There are required minimum distributions with the IRA, the traditional IRA as well, the deductible and the non-deductible, and starting at the age of 72, you do have to start pulling out a minimum required distribution. Now, if you don't qualify for a Roth IRA and you don't qualify for a deductible IRA, there is also the option of a non-deductible IRA. Basically, this means that you don't get any tax credits. You really don't get any tax benefits other than the fact that the taxes that you're going to pay on the gains are deferred. So you don't have to pay on the gains that you make in the market until you pull that money out of retirement. But with a non-deductible IRA, that means you're putting in post-tax dollars, so after-tax dollars. So you've already paid taxes. You then, because the IRS doesn't keep track of it for you, you have to keep track of how much money you've put into a deductible or a non-deductible IRA. This is confusing because when you pull that money out in retirement, you're only going to get taxed for the gains that you've made, but you need to keep track of the money that you've actually put in so that you're sure you are not taxed again on the money that you put in. See, it's not as exciting as a Roth IRA. There's so many benefits to a Roth IRA, and then you get to the non-deductible IRA, and you wonder, is it even worth it? The nice things about an IRA or a non-deductible IRA is that there are no income limits, so anybody can add to a non-deductible IRA. And you don't pay taxes on your investment gains until you retire, which is kind of nice too, I guess. And there are no high fees. The nice thing too is you can use the money in your IRA to pay for qualified expenses, again, for like college or a first-time home purchase. With all that being said, is it worth it to put money into a non-deductible IRA if you don't qualify for a Roth IRA or a deductible IRA or a 401k? I would say yes. If you don't have any other options and you want to save more money for retirement, you're still saving more money for retirement. So I do think that it's still worthwhile, especially if you've already done the other things. If you're already maxing out your 401k, if you already tried to get a Roth IRA but you couldn't get it. But the nice thing too is there's a backdoor Roth IRA that you can basically take money and put it in from a traditional IRA and put it into a Roth IRA. But we'll talk about that in another video. So I know this is a lot of information, and hearing the word IRA so many times and 401k so many times is probably frustrating and confusing in of itself, but just watch this video 100 times and then you'll understand it, I swear. Just kidding. Maybe you will. Try it. But essentially, what do you do with this information, right? What I recommend is 9 times out of 10, the Roth IRA is the way to go for most people. So before you look into a traditional IRA, check out the Roth IRA. And if you qualify for it, put your money in there because it's a great account. It's probably not going to be around forever because the government likes to take anything that's good to us. So also, in addition to maxing out a Roth IRA, max out your 401k. Your 401k is a great vehicle for retirement, especially if you're able to manage it yourself. I recommend managing it yourself and not clicking on having Fidelity manage it for me because that comes with a lot of fees and it costs thousands and thousands of dollars, which means years of retirement for you. So if you can't do any of those things, look into the deductible IRA next. And if you can't do the deductible IRA, look into that traditional IRA. Does that sound good? Does that sound good? Does it sound a little less confusing, hopefully? Hopefully it was. If you have questions, leave them in the comments and I will totally answer. You can also check out the blog post if you want to see this all in writing. I'll leave a link to that below. But thanks for watching, and I hope I was able to make this a little bit more interesting than going to Investopia. I don't know. But anyway, leave your questions below, and if you enjoyed this video, hit like, hit subscribe, and I'll see you guys next time. Thanks for watching!